start buying. So if we see the price turning back up again, the idea is that the fund desks will come straight back in and start getting long again. So in other words, if the price then does that, they re-establish those long positions. And that's them effectively now dollar for dollar tracking the market, aren't they? Dollar for dollar, they're tracking this market. But at this stage they're getting no edge on alpha, are they? This is basically a zero alpha story, right? They have no edge on the alpha itself. Hold on a second, I was just taking a quick short on the NASDAQ, so it's paid out nicely. We just got a quick spike there at 160s, took a quick short, managed to get some business there. And that's paid off rather tastily against our commercial line on the Ninja Trader there. Pretty good little quick snap trade there, guys. Quite nice as a quickie. And who doesn't like a quickie, guys? We all like to get in there, get the business done, and get out. So let's take a look, especially at the open. Let's take a look at that trade. And there it is there. Pretty good. Pretty good bit of business. What do you think? 4 contracts, $3,200. In and out in 60 seconds, guys. That's like every trader's dream, isn't it? In and out in 60 seconds. Woo-woo. I mean, you'd have been proud of that one, wouldn't you? You'd have been proud of that one. Anyway, so we'll go back to this tracker question. So they're now long the tracker, right? So the basic idea then is if the price starts selling off, if we can draw the line, if the price starts selling off, and if I start seeing, for example, instead of them going short here, I start seeing them buying here, well, they're not following the tracker story, are they? You agree? They're not following the tracker story here, are they? They're actually aiming now to try and increase alpha. They're trying to gain alpha here because they should never be long at this point. They should be short. So if they think that they should be buying in here, then they've got a feeling that they can get an alpha outcome from this, a positive alpha outcome. And they're nearly always right. Not always. But they're nearly always right, you know, when they start adding alpha to their trade. And the idea is if they add alpha, I'm more likely to, if they're adding alpha on the buy side, I'm more likely to be a buyer. And if they're adding alpha on the sell side, I'm more likely to follow them into that as a possible sell play, right? So that's what we normally see. Is we normally see this type of tracking process here where they buy on the way up, they sell on the way down, they buy on the way up, and they sell on the way down. Well, you could almost imagine, Jack, you could almost imagine that very similar to your market delta, can't you? Well, the market delta is the tape, isn't it? So you do have access to that type of information. You know, so when you're looking at your market delta, well, that should be tracking the price. So if you'd ever see them then not tracking the price, i.e. market delta not doing what price is, you've got to say, well, where's the trackers going? Why are the trackers not following the delta? Well, because they must believe that there's an alpha opportunity to take advantage of here, right? So when the market delta doesn't track price, somebody is trying to generate alpha. And if you understand that somebody is trying to generate alpha, you've got a great opportunity to make some nice money. As if you can establish, if you believe they're going to be right, then that's even better, isn't it?